Reserve Bank's 25 basis point cut in the repo rate yesterday has now seen a 100 basis point decrease in interest rates since September last year. This is positive for giving relief to consumers and businesses alike who are having debt, and may also assist in propelling spending in the economy. So what about the property sector? How has it been faring, and what does the cumulative decrease in rates mean for this sector? Well, to discuss further, I'm joined by Tim Akinnusi. Thank you very much, Tim, for joining us. So how has the property sector been faring in recent times from a price growth perspective? And I suppose it's dependent on where we're talking about in the country.
Yeah, so, the property sector has continued to struggle under the weight of the interest rates. The 100 basis points has been a huge relief, because cumulatively it's had a major impact in boosting affordability for customers, and also helping customers deal with the pressure of repayments around the debt that they owe. So the 25 basis points, I think, is certainly warranted, and we welcome that, because that ultimately will help customers in the short term to pay off debt a lot quicker, and it will begin to boost confidence that customers can go back out into the market and look for ways to spend to try to boost the economy.
Yeah. So, Tim, we know that 25 basis points, not really that much of a big deal, but with the cumulative 100 basis points since last year, to what extent do you think that will help to propel the local economy?
Every basis point counts. This 25 basis points, for example, on a R1 million home that you purchase, on your repayment will have R170 reduction in your repayment to the banks. And cumulatively, that does have a really good impact. I think the goal for customers is to focus on taking this additional savings and using it to repay down high interest bearing debt. And that way they will maximize the impact of a reduction such as this 25 basis points that we've just recently had.
Yeah, you've leapt ahead of the question that I was going to ask you about the advice that's given that, instead of homeowners taking that cut in interest rates and paying a lower repayment, some people advise that you speak to your bank and say, no, keep it at the previous installment. How effective is that in terms of, reducing the time over which you need to pay your bond?
It's a very effective strategy. In fact, if you can afford it, you should be advising your banks to keep your repayment profile steady, whilst that rate impact helps you reduce the interest you pay on the outstanding debt. But if you can't afford it, you should then look to say, if you have a personal loan that is attracting an interest rate of like 19 to 20%, rather put this additional savings that you're getting from this rate reduction into repaying that off a lot quicker. So I would say that, through the cycle, we are expecting further rate cuts. I think inflation has been well managed. It is below the SABC target range of 3 to 6%. So as long as consumers continue to be fiscally responsible, we should have a cycle where more rate cuts can be expected during the course of the year.
Yeah. Whether we get more rate cuts or not, Tim, what is your sort of outlook for the property sector in South Africa? And I know, as I mentioned at the top, it is a very nuanced market because some areas are different to others, but your broad expectation in 2025?
I think you are right. It is a nuanced market. And one would say that, there are not a lot of buyers out there today. The reality is that consumers have been under a lot of stress over the last 24 months. And that does bode well for certain types of consumers that are able to make investments into property, because right now rentals seems to be the thing that's in vogue, because customers can't obviously afford to buy. So if you are an investor looking to purchase rental property, this is the right time to buy. But if you are a customer out there who can afford to buy, and this is a priority for you, you are in a very good position, because there are not a lot of buyers out there that can afford to buy. So your negotiation power is going to be a lot higher, and you have the ability to ensure you get the best deal for yourself in a interest rate environment that is declining. So that's a really good thing for you in the short term, looking into the future.
All right, Tim, thank you very much for those tips there. That was Tim Akinnusi. He is the CEO at Mortgage Market.